actually, with this guide for the quarter, they're actually sort of growing into their valuation, albeit still an expensive stock. So they probably went from 26 times revenue. If you sort of extrapolate out the 16 billion, let's say now they're at 22. That's the good news. Margins, operating margins, 57.5%. Same quarter last year were 20%. Incredible. I mean, so all great things. I mean, the superlatives one after another. The question, of course, is can this growth rate continue, and is it justifiable of this valuation that we're seeing? Well, listen, but I've been I got to be fully, I've not been a believer for a while.
What will change your mind to make you a believer?
Well, at this point, to be honest with you, I mean, sometimes things just get so you're just so wrong on something, it's not even worth. No, you can't, because if you start chasing now, then you start doing it backwards.
Yeah. Bonawyn, I mean, the law of big numbers here comes into play. I don't even know what the law is, but whatever. I respect the law. Let me just tell you, I respect the law. But the law of big numbers says you can't keep compounding at these rates, can you?
No, you can't. But you're probably not buying the stock because you expect this to go into perpetuity. Essentially, the argument is that this thing, despite its valuation around 48, 50 times, I believe it is, was undervalued given the growth that they were going to have in top line and margins going forward for the next 2 or 3 years. Keep in mind that they're still meeting less than 50% of the demand that they actually have for these chips. And the stuff that we kind of brushed to the side, autos, gaming, the things that we totally forgot that they do, still beat across those boards as well. So clearly AI is the driver, but give me another pure play for AI right now. That is monetizing AI
and that's
right
what this
now.
is.
Right.
Until in today's time.
Exactly.
So, and they are, depending on who you speak with, and I tweeted this today, they're either 70 or 85% of the AI market. It's theirs to lose. So when you look at it in those terms, no one's even knocking on their door. No one's even close to where they are. So Bonawyn brought up some numbers, or actually brought up some buckets of income. Right now, AI is 5% of their total sales. If you look at data centers, you're at 20%. Internet of Things, it's 10 to 15%. This is not pixie dust. This is not something that's glitter and sparkles. This is happening right now. And to Bonawyn's point, nobody else is monetizing it right now. It's their game to lose, and their game to lose for quite some time. How big is the market going to be? 160 what?
Who knows?
Put a B or a T on it? Who knows what the market's going to be, right? They're going to own 80% of it.
Going forward. Katie, we had, I think it was Carter Worth last night, showed us a chart. And on previous earnings days, last quarter and the quarter before that, the gap up was just visible. You saw it right there. It was like looking at an x-ray of a leg fracture. And there was the break. And you saw it go up 24%, 27%. This looks like a 10% move. What does the chart tell you?
I mean, it's really remarkable to see a gap up after such a prolonged up move. But it's what we saw from Nvidia in May also. Yeah. So we have the potential to see immediate upside follow through. What we tend to do with short-term investors is to watch the gap, kind of mind the gap.
Mind the gap.
Tomorrow's gap, if it falls very quickly within maybe a week or so back into that gap, that usually is a short-term setback, and that might be an indication to reduce exposure temporarily. For long-term holders, I can't make a compelling case against the stock. It's new highs. It has very good long-term momentum. But before earnings, we did see a loss of momentum that was shared by many large-cap tech stocks. So some folks might want to take some profit.
There was a little bit of sentiment around this table last night. You weren't here, and you weren't, and nobody.
I was here.
You were here. I don't know. You were awake during this part.
What part?
The part where maybe it was you who said it. Is this as good as it gets for Nvidia?
No. How can it be as good as it gets? We haven't even started the market. So there are a lot of companies that are pixie dust.
Yeah.
Right? So there are a lot of companies that aren't capable of monetizing it. They have a backlog. Can you imagine what their backlog of orders is right now? Their only issue is capacity constraint.
China's buying. A lot of the Chinese companies are buying their chips, right? And they've got a big backlog from China as well, not just U.S. users.
I think those are slightly different chips, right, given the sanctions that have been imposed there.
Yeah,
I think,
some of them, yeah.
But all that does is increase demand. That's another chip that needs to be manufactured and shipped there's probably an AI light chip given, what we've done in terms of like that trade balance
the sanctions,
there.
Yeah.
But to Steve's point, it really is about they've yet to tap into. Now, honestly, I've been bullish to stock. I actually view it through a slightly different lens. It is probably as good as it gets in terms of perception because we just don't know what this AI boom is. So our imagination allows us to extrapolate what this market may be. At some point, we'll actually be able to quantify what that market truly looks like. And at that point, maybe you start to see some pullback. But to your point, remember Tesla's run. And we were all saying, listen, Tesla trades on nothing but technicals and pixie dust. We have no idea what the valuations are, but there was no other player in town. And I think it's a similar situation. So until we're actually able to put a finger on it and quantify what this market actually looks like, we know that they own 80 to 90% of our imagination. And to me, that's a compelling reason until you're able to quantify and show data that shows otherwise.
And one last thing on this. We haven't heard, or did they say anything about a stock split? They have not yet.
Buyback.
They said a buyback.
$25 billion.
You get that next thing about sniffing around about a stock split. There's a whole group of investors that are waiting for that stock split for that next leg higher, believe it or not.